The 29th meeting in 2012 of the Finance Committee of the Scottish Parliament. I'd like to remind all members to please turn off any mobile phones, pages, Blackberries, etc. We have one agenda item today to take evidence from the SPCB as part of our draft 2013-14 budget scrutiny. And can I therefore welcome Liam McArthur MSP, Paul Grice and Derek Croll to this morning's committee meeting. And just before I invite Liam to make a short opening statement, I'd just like to pass on the apologies of Michael McMahon, who's running somewhat late. Liam.
Thank you very much, Convener, and good morning, colleagues. I'm pleased to have the opportunity to present details of our budget submission for 2013-14 and to report on the progress we've made in meeting the planned reductions in the SPCB's budget, which we advised the Finance Committee at the same time last year. After 2 years, we remain firmly on track to deliver the programme of savings identified. By the end of 2012-13, we'll have achieved an 11.9% real terms reduction in the SPCB's budget compared to the baseline of 2010-11. This means that we will have delivered the 4-year percentage savings target for the overall Scottish budget in just half the time. The profile of our annual budget reduction, as shown in the chart on the presiding officer's letter to the committee, is therefore considerably steeper in the first 2 years of the UK Comprehensive Spending Review than the overall Scottish budget, as we deliver our savings early. But it levels off in the remaining 2 years, although still shows a further modest real terms saving in each of the final 2 years, finishing a cumulative real terms reduction of 12.7%, 1.1% below the 11.6% target for the Scottish budget overall. The savings to date have been achieved by a combination of pay freezes for SPS staff members' pay and expenses, staff reductions and a change management programme which has covered all aspects of the Parliament's operations. Although the current pay freezes come to an end in March 2013, we recognise the extremely difficult fiscal environment in which the whole public sector continues to operate. Accordingly, our 2013-14 budget submission for staff pay assumes continuing pay restraint with provision for a modest settlement in line with current public sector pay projections. Similarly, MSP salaries are restricted to the 1% increase announced by IPSA in respect of MPs' salaries. In the context of the Treasury's forecast GDP deflator of 2.5% for next year, these both represent further reductions in real terms. If I could touch on the issue of the external security facility, you'll be aware of the SPCB's decision earlier this year to proceed with the construction of an external security facility. This is the most significant project which the SPCB has undertaken since the move to Holyrood. I can confirm that we have been able to accommodate the planned expenditure on the ESF within the overall indicative forecast previously advised by the corporate body to this committee. Accordingly, we have not changed our total indicative forecast for 2013-14 from the figure advised to you last year. On the issue of Commissioners and Ombudsmen, as members are aware, the SPCB is charged with the oversight of these bodies, and the Finance Committee has rightly taken a very strong interest in how we exercise this oversight. The 2013-14 budget submissions of the various bodies amount to £8.1 million, which is a reduction of 2.1% in cash terms compared to the equivalent 2012-13 budget. The detailed schedules provided in this year's budget submission in response to questions raised by this committee at the equivalent stage last year confirm that each office holder has met or exceeded the savings target set by the SPCB by 2013-14. The SPCB is acutely aware of the fine balance it needs to strike between robust scrutiny on the one hand and the operational independence that these bodies were given when Parliament established them. In this regard, I'm particularly grateful to the committee for its strong interest over the recent years and helping us to adopt a robust approach in our scrutiny of the budget bids. Finally, Convener, I would like to place on record the appreciation of the corporate body for the work done by the Chief Executive and his team in preparing the SPCB's 2013-14 budget submission. That concludes my opening remarks. I hope I've managed to convey a sense of the approach that we've taken to the budget for 2013 and the years following on from that. and my colleagues and I would be more than happy to answer any questions the committee has. Thank you.
Thank you very much for that brief opening statement, and I'd also like to thank you for the detailed submission which was given to members. In fact, a submission so detailed I think it's likely to truncate the number of questions that come from our committee, but I will start with one or two. And it's just with regard to Schedule 2, the capital expenditure bid is £3 million, but last year the forecast was 2.313 million. But there's no commentary in Schedule 3 explaining this increase.
So I'll maybe bring officials in on to cover the detail. I mean, I suspect that some of this is covered by, as I said, the indication of the decision by the corporate body to move forward with the screening facility. And obviously, until that decision was taken, there were issues around where that funding appeared within the budget. Having taken that decision, we've been able to allocate expenditure that's already been made in terms of the preparatory work, but also looking forward, allocate the funding under capital headings for the next couple of years. Don't know if there's any other.
Yeah, I mean, I notice obviously from 2013-14 to 2014-15 there's a reduction in capital spend from 3 million to 2.1 million. Is there any investment in the new external security facility in 2014-15, or will the work all have been completed before the start of that financial year?
Should have been.
I can answer that. No, it should be completed by then, convener.
Right, okay, that's fine. It was
So
just
any capital beyond that would be for more traditional capital investment in the building.
I think, I mean, just to add to that, I think where we've tried to be as upfront as we can about where we expect the expenditure to fall over the course of the 2 financial years. I think we're conscious that there may be a little movement there depending on how the project progresses. But I think the corporate body as a whole is comfortable with the way in which we can manage this, and it certainly shouldn't result in any additional pressures on the budget in either of those years. And there's certainly an advantage in being able to spread it over the 2 years, obviously.
Okay, thank you. Now, last year we had quite a discussion about audit, and there was an issue, of course, with regard to the audit fee, and the audit fee increased by some 2.6%. Although there was supposed to be an average reduction of 7.75%. It was indicated last year there would be some discussions with Audit Scotland on that, and I noticed there has been quite a substantial reduction in the audit fee to £64,000, but there's no commentary on the discussions which you had with Audit Scotland, so I'm just wondering, given what was discussed last year, if you could give us some
I'll maybe hand to Derek, but I mean, certainly the intervention of the Finance Committee at this stage last year was exceptionally helpful in giving power to our elbow in those discussions when we took those away. And perhaps Derek can fill you in on the detail, but I think what you see is evidence of the outcome of those discussions.
That's absolutely right. The timing of our appearance with the Finance Committee last year was just before Audit Scotland actually publicised what their plans were for future years' audit fees. So we discussed with them very shortly afterwards, and actually wrote back to you last December to confirm that we would incorporate the reduced fees in our forthcoming budget submission. So that's now in place, and there's a decline over best part of 3-4 years in the audit fees.
Thank you very much. I do have some questions from colleagues, so I'm just going to open it out to other members of the committee. And the first member will be the Deputy Convener, to be followed by Jean.
Thanks, Convener. I think last year, Mr McArthur, we had quite a discussion about maintenance of the building, and you made some comments which I was looking at about, you know, if you put off maintenance, then it builds up over long term. Points like as a building gets older, inevitably you should be spending more money on it. So I just wondered, could you update us on that, and where are we going, and are we satisfied that we are spending enough on this building to keep it as it should be?
I do recall those exchanges, and I think the story hasn't really changed at all. I mean, the planned maintenance expenditure is slightly up on last year for ongoing maintenance, including internal plant and machinery, doors, windows, electrical, plumbing, heating systems, and the like. I suspect that is what one would anticipate as a building ages. I'm not sure there's anything that has occurred over the last 12 months or we're anticipating that would cause us to have any concerns around the projections going forward. I mean, obviously there is maintenance that is required that is perhaps less easy to predict, but there is contingency in there to deal with that. We've also, in relation to accommodating the external security facility, looked at how the ways in which we map out expenditure in this and other areas to make sure that we retain a building that is fit for purpose. We don't simply increase the cost that we're going to have to incur later down the line, but it has allowed us to accommodate the security facility within the overall envelope of the budget for the next 2 years. I don't know if there's anything Paul would like to add on that.
Simply to say that we do recognise the intense pressure on this building, you know, with something like 400,000 visitors, events, a lot of users. So I think corporate bodies very keen to, I think, meet the point you make about investing now to make sure that we don't leave a legacy down the road. And so that continues to be the policy. And I would expect it to continue that way, as Liam McArthur says, for the foreseeable future.
Okay, thank you. And the other kind of wider point was just, I mean, it's all very impressive that there's a 12.7% saving overall compared to the 11.6 I think it was for the overall Scottish budget. I think it's about 17% for some of the commissioners and so on. I mean, are we really happy that we can produce a service at that level? Or, you know, I mean, I accept that you can save, you know, pay freeze saves us 1 or 2%, but these are quite big figures. I mean, that's 1/8 of the budget.
I mean, it's an issue we wrestle with, and there's no doubt that one could plan out scenarios that would deliver very, very significant cuts. But we've had to, as part of that process, balance that off against the requirement, the expectation of members and indeed other users of the building, and make sure that they continue to get the service they require in order to carry out their business. Now, I think we were in a fortunate position, if you like, in that through an exercise undertaken before the cuts were required to be delivered, there's been an ability to manage that downward trend in expenditure in a way that has not, I would suggest, had an impact on the quality of the service that's provided, as I say, to members and other building users. I'm aware that pressures have arisen at various stages, and we've tried to address those where we can. I mean, the obvious one, I think, is perhaps in relation to IT, where members have expressed concerns at various stages about what is being delivered. Some of that is inevitably the result of staffing changes in that area. Now, we've listened to what members have said. We've tried to then put in the support to make sure that those concerns are addressed. But I think overall we've managed that budget reduction in a planned way. It made sense to make the savings early. We were able to do that through a series of voluntary redundancies, retirement, etc., and through a pay freeze as well. But I would say that not only have we achieved that against a difficult financial backdrop, but if one looks at some of the additional responsibilities that Parliament has and is taking over, those have also been accommodated and factored into the budgets overall. And I think the corporate body's fairly comfortable that we're achieving that balance between delivering the cost reductions on the one hand, but continuing to maintain service levels on the other.
And I mean, finally, with that, do you think that applies also to the commissioners and the ombudsman costs, because they're obviously individually dealing with smaller budgets?
I mean, as I said in my opening remarks, I mean, we strike a balance between providing a robust scrutiny of their budget and a challenge to their budgets without compromising their independence and their ability to do the job for which they were set up by Parliament to perform. I think in that respect, we've been very grateful for the support of the Finance Committee in helping deliver that robust scrutiny. There are certainly contingencies built in to deal with specific issues that some of the commissioners or ombudsmen may face, not least in relation to potential legal costs, etc. There's also, you will note this year, a contingency to recognise the requirement of one of the commissioners possibly to move offices in due course. But I think from the discussions that we've had with each of the office holders, I think they are all very comfortable that they're meeting these savings targets, but are still able to deliver against the roles that have been set them.
Thanks so much.
Okay, Jean, to be followed by Jamie.
Thank you, Convener. This is really a kind of supplementary to the Convener's first question about the external security facility and the cost. If we look on Schedule 3, the capital expenditure, I just wonder, what is the total cost of that facility? Because there's a part of it in the comments that 2.4 million of the 3 million is for that, but in this year's budget, that's not broken down. Part of it, presumably, it's costing more than 2.4 million. Do you know what the overall cost is?
Absolutely. The cost that for the facility overall is just under £6.5 million. As I said in response to the convener's question, some of what we've been able to do in terms of the phased approach that the previous corporate body took and was taken on by the current corporate body meant that some of the preparatory works in terms of design, ultimately then some of the initial sounding out work on the ground have been accommodated within the budget without being assigned to the screening facility itself, because until the corporate body took the decision back in September to press ahead with this project, it would have been inappropriate for us to have a budget line under security facility. So some of that spend is taking place has already taken place and appears within the current budget. The rest will be spread. I think it's about, is it 3.5 million over next year and 2.5. Yeah, in 2011-12, 0.5 million, and that, as I say, includes design fees, project management, etc. 2012-13, the tender exercise and the actual commencement of construction, which will total 3.6 million over the course of that financial year. In 2013-14, where the project itself will be completed, the budget allocated is 2.4 million. Now, as I say, I think we anticipate that there may be the need to flex a little, depending on how the project progresses. But we are absolutely determined to make sure that we are on top of that on a daily basis, a weekly basis. Updates have been provided for the corporate body, and we're confident we can manage that within the budget that's been set. And indeed, the contract itself has been structured in such a way as the risk for any delays rests predominantly with the winner of the tender itself.
So I've just not read these papers right to identify another £4 million for the facility. Is that right? In another budget?
No.
And another
No, and it's not that I think you're not reading it right. It's just the budget just identifies capital and revenue, and the external security facility, in a sense, is a major capital project across 2 years. it doesn't have a separate line of its own. So you're not reading it wrong. You've just got to look at we're focusing on next year's budget, but in fact, just over half of it will be built out of last year's and this year's budget. So that's really the point.
And my other question is on the line before that on Schedule 3. There's an income for the shop, for the Parliament shop. Is that net profit?
It's net loss.
Net loss.
Yeah, the shop facility is an issue that we've returned to at various stages. I think the loss is around 45.
I mean, it's actually it's the income, it's the turnover for the shop, which is shown separately for reporting purposes. We need to strip out the income from the rest of the costs. Overall, if you take the income and the staff costs and the cost of stock, there's an overall loss of about 46,000.
Where do the purchases for the shop appear?
They're in part of running costs.
I see. So you don't produce accounts for that unit?
We don't show it here. We do produce separate statutory accounts for tax purposes for the shop to demonstrate that it's not making a profit.
And is it possible to see these?
Certainly we could.
I mean, I think you highlight an issue that the corporate body itself has been aware of for a number of years, that there is a challenge in terms of the profitability or otherwise of the shop. There have been various initiatives undertaken, and I think it's fair to say they've met with varying degrees of success. I think there's been a further piece of work done to try and see how we might be able to put it on, if nothing else, a more cost neutral footing. I mean, I think it's a valued and a valuable facility to have within the Parliament. It faces some challenges, I suspect, in terms of its location. There's always a balance between whether or not you have the high-ticket, high-value items that may not necessarily drive a large amount of sales, but have higher margins, or whether you have a wider range of less costly items that school groups and others pick up as a souvenir of the visit to the Parliament, but are never going to be particularly profitable overall. So I think there's some issues there that as a corporate body we're going to continue to need to look at, but I don't think there's any question that this is a facility that we need to maintain and make sure it's meeting the needs of building users.
Thank you. Convener, I want to return to the issue of the budget for the SPCB appointed commissioners and office holders. I was interested to hear, and it's also set out in Schedule 3, that the money that will be required for the potential one-off relocation will come from the contingency funds. I suppose the first question is who might be relocating. I don't know if you're able to tell us that. If you're not, then we'll respect that. But just out of interest, it may be interesting to know who is relocating. But can you tell us how much this relocation will cost, and if it leaves enough headroom in the contingency fund?
Yeah. I mean, there's been quite a bit of discussion about this for a while, and we've been looking at various options for the location of the commissioners. Obviously, in previous years, there's been a move into the Parliament building, and we're keeping this constantly under review. I mean, obviously, it's a significant part of the cost that the office holders and therefore the SPCB bear. I think I'm right in saying that the contingency here is in relation to the lease arrangements and the anticipated future requirements of the Commission for Ethical Standards. But Paul indicates there's probably been more recent developments than the corporate body has dealt with, so I'll maybe invite him to update you.
Yeah, I think you're right in your answers. Just to say, I think it comes back to the point which Mr. Mason asked about the commissions themselves. They're quite small bodies, and therefore there's a limited scope at the end of the day to continue to make savings, and the corporate body has identified property costs as an area to look at, and because of the way they were set up, you'll recall this over a period of time incrementally, each has got its own office, and so the corporate body's plan in the longer term is to look to see whether there's even a possibility of having all or most of the commissioners operating out of one hub, thereby enabling further savings. And that's the plan. The difficulty we face is most of them are in fairly long leases, with different breakpoints and different penalty clauses. So that's been quite a complex thing to work through. What I would say is we've been working with the government, and they may well be able to offer the solution as a major landlord. So that's really where we're going with that. I think that's a longer term plan, certainly will stretch beyond next year. What there might be the need of next year is to extract that particular commissioner from that lease. And the other thing to note is that I think it's the Human Rights Commission is already co-located with the Ombudsman. So we're doing this, but I think the bigger plan is to see whether there's a possibility of getting all of them operating out of a single facility, which, apart from, I think, reducing the overall lease cost, I think offers some potential around re-engineering some of the services, which might deliver savings down the line. And I think that's probably the only way we can go to get further savings without actually potentially impacting on frontline services.
I mean, I think we're conscious all the way through that as we make these savings, as I was saying to, in response to Mr Mason, we're conscious of the need not to disrupt the work of these offices in carrying out their duties. And I think what we've tried to do is identify areas where we can make the changes, make savings early, but with a longer term view about how we might be able to bring this together in a way that there's a more sustainable financial footing kind of longer term.
I mean, that all sounds like a sensible thing to do, but my question, I suppose, was, have you been able to quantify what because there's a forecast £50,000 increase to the contingency budget from which you want to draw upon for the purposes of this one-off relocation. So have you been able to quantify what the costs of this one-off relocation will be?
Sorry, I can't answer that. We don't. The answer is we don't know exactly. We think we're confident the 50,000 will cover it. Hopefully, a little less than that. The reason we put it in contingency, not in the line, is because that negotiation, if you like, hasn't completed yet. So we're confident that will cover it, but I can't give you a precise figure, which is why we put it in the contingency.
Okay. What about the securing of savings in the medium term, which is obviously the rationale set out here for this one-off relocation? Have they been quantified yet?
It's difficult to give a precise answer because we don't yet. We're still in discussions with the government in particular. A lot of that will depend on what sort of lease deal we can get on a premises, the speed with which we can get all the commissioners into it, and it's that equation. So unfortunately, at the moment, what I would say is you'll see from the figures, it's a substantial area of spend. And the corporate body, and certainly myself, are hopeful if we can bring that off in the longer term. You're certainly talking of hopefully savings of tens of thousands, and therefore worth pursuing. But I can't quantify it, unfortunately, until we actually find a location and get a lease on that. But it was obviously the sort of thing that we would hopefully be able to update the Finance Committee in more detail as we go along.
But we were quite deliberate in, as Paul has suggested, not putting this within the Commission's budget line and keeping it as a contingency, which is what we very much see it as. I mean, there's the additional contingency that's there in relation to the office holders to deal with, as I said earlier, things like legal challenges, legal costs, etc., which are inevitably, I suppose, part and parcel of some of the work they're involved in. But as Paul indicates, there's been discussions with Scottish Government, with the office holders, and obviously within the corporate body about how we may deliver more significant savings over the longer term, albeit that I suspect there'll be an upfront cost for that. But some of the figures that we've indicative figures we've seen at this stage are at least encouraging.
I suppose we look forward to further detail in the future. I just have one final question, that's okay, we're in a different area, and it relates to SPCB staff pay. And I see it set out in the paper that the proposal is for a modest provision for future pay settlements in line with current public sector pay projections. So I'm presuming the answer to this question is yes, but I just want to absolutely clarify, does this mean a 1% increase for most staff? And I don't know the breakdown in terms of staff, if this includes anyone at higher up rating for lower paid staff. I think it's £21,000 or less is the proposal across the rest of the public sector, and a pay freeze for the highest paid SPCB staff.
Again, I'll invite Paul, who's more directly involved in the negotiation themselves, to talk through the detail. I think we were conscious that I think that the committee last year acknowledging that this was a pressure that was going to bear on the budget once the pay freeze came to an end, and we've sought to factor that into the budget. I mean, the negotiations are clearly still at an ongoing stage, and therefore predicting what the outcome will be is probably fraught with some difficulties. But I mean, maybe Paul can set it where we are with that.
I can't add much more than that, because we are in the middle of negotiations with the 3 recognised trades unions as we speak, and I wouldn't want to preempt the outcome of those negotiations. What I would say is that the current pay freeze runs to the 31st of March next year, and I would be optimistic that we will hopefully have an agreed deal to announce before the current pay freeze comes to an end. But as the paper states, we're operating very much within the spirit and the context of public sector pay awards generally, but recognising the Parliament is an independent body, and therefore I think it's proper that it negotiates independently of government and others. So that's the position, but I can't say any more, unfortunately, as those negotiations are still underway.
What about, you might be able to say a bit more in terms of the last point, in terms of the management level then, is it likely to be a pay freeze for the highest paid corporate body staff?
What I'm happy to do is to write to the committee once the negotiations have been completed, and then I'll be able to answer all your points if that's acceptable to you. It's dangerous to speculate on any aspect. These things are done in the round, and I think out of respect for the unions, if nothing else, it would be right and proper to allow those negotiations to conclude. But I'd be more than happy to update the committee at the point that they are concluded.
Okay.
Thanks, Convener. As members know, the former members with the former restaurant and bar was significantly loss-making, and we fairly recently changed the arrangements and brought that into the allowances office. And part of the rationale, I thought, for doing that was that the former facility might be able to be used for income generation, and yet there's not actually any projected income generation I can see here, because all the projected income actually relates to the shop. Is that in some other line, or is that not something that would show up on?
Yeah, I mean, I'll ask Paul to take that in a second, but clearly the decision to relocate the bar facility to the former allowances office was an issue over which we agonised for a while, because while the dining facility in the evenings upstairs was not as well used as I think it needed to be, and we were incurring quite a significant loss as a result. It was nevertheless, it was something that members did, or those that used it did value it. But I think we, having deliberated on this for a while, reached the conclusion we simply could not, against the backdrop of what we've been discussing this morning, justify continuing a subsidy in the region of about £50,000 a year. In terms of the additional income generation, I mean, I think what the move has also enabled, as well as what appears to be a pretty well supported arrangement in the downstairs of the garden lobby, is opening up an available space that has been pretty well used already at this stage. I mean, I've been to, I think, 3 or 4 events that have taken place in the restaurant area and into the bar. Events that, with the exception probably of the garden lobby, couldn't have been accommodated within the Parliament building, and therefore either wouldn't have taken place or would have had to have taken place some way down the line. So I think we're already seeing the benefits. In terms of the specific issue of income generation, maybe I'll ask Paul to respond to that.
You're right, is the first answer. That's really one of the particular uses we thought that facility could be used for. There's actually a piece of work in hand just at the moment looking at it. It's not that straightforward. There are issues, obviously, with access to the building. We can't just allow people to come in off the street. There are, I think, reputational issues. We're a parliament, and I think there's a fine judgment to be made there as to how far we would push that. And that's certainly my own view on that, is you need to have members central to that. So I think there's some issues there we need to think about. In terms of how income would show up, in this area, actually, it would show up almost as a negative subsidy on the catering contract, and that's how it would be accounted for. So it's different in that sense to selling things to the shop. That's why it doesn't show up in that way. But you would expect it to flow through if we're successful, as I say, in reduced subsidy, reduced costs. And again, I think perhaps something that when we're before you next time around, we hopefully be able to say something more precisely on.
Yeah, I mean, I think the driver for this was addressing a cost that we were continuing to bear through the subsidy, and that I think was really the principal motive behind taking the decision. The revenue raising opportunities are, as Paul's indicated, always a balance where I'm fairly sure if you took a gung-ho approach, the kudos of holding events and all the rest of it within the Parliament would be a relatively straightforward sell. But I think it wouldn't necessarily be the sort of message that we want to send out about a building that is there to be open and accessible to all. So I think we've got a bit of an issue to wrestle with there. But as Paul says, it's probably something we'll need to return to next year and in subsequent years.
I think I just feel that given the very negative publicity there was over a number of years about the cost of the previous facility, and I think the new arrangements are better than the old arrangements, but the Parliament took quite a hit in terms of negative publicity about the cost of the previous facility, that actually being able to demonstrate the saving through the new arrangements would actually be quite beneficial. And I can say I've also been to events in the former bar and restaurant area. One of them was held by a fairly wealthy profit-making organisation. I do wonder whether organisations like that could possibly be contributing something towards the running of the building if they are using our building.
Again, I suppose there's a balance there that, I mean, this is a building where since it opened, there's been a very deliberate effort made to make it as open and accessible as possible. And we haven't really distinguished between for example, small charities on the one hand and large corporates on the other. If their use of the building is a legitimate use, that they work with members to host events, whether they're briefing events or events to mark particular occasions, then I think quite rightly the corporate body and Parliament as a whole has taken the view that that's an appropriate use of the building. So I think you're absolutely right that we did attract a fair amount of criticism for the ongoing subsidy of that facility. We've taken steps to address that. There are potentially other opportunities that we can look at, but in the discussions we've had to date within the corporate body, we're very well aware of the sensitivities in this area, and how do we distinguish between the sorts of events that you're talking about and the type that may generate an income in due course. But I welcome your comments about the new facility. It's good to hear.
That's exhausted questions from the committee, and I would just like to add that I hosted a reception for the Prince's Trust in the former Members' Restaurant space, and it was very, very popular. I think it's got a really good atmosphere, better than the Garden Lobby, I think, for receptions, and it really has helped break the kind of logjam in terms of having to wait months for events where you, in that case, had 170 people. And the issue, of course, is that many of the corporates who have money do spend money on catering, etc., which also makes some kind of contribution. I was just going to ask you one question, which is really to Paul, I suppose, and it's obviously some months ago, Paul, you recall, I contacted you about the potential for saving money for the Parliament in terms of rather than individual members having their own telephone accounts, gas bills, electricity bills, all the kind of utilities, business stream, etc., that could be collectivised in order to make reductions and I'm just in the overall cost to the Parliament. I'm just wondering if you can update us on what kind of progress has been made. I know significant progress has been made through talking to your officials with BT, but what other progress is being made and is in the pipeline?
Well, thank you, Convener, and thank you for raising it in the first place. It was, the minute I got your email, actually, I did think this was definitely some potential. So, as I think you now know, I've got a small team working on this, and I think the first and most positive bit of progress we've made is around telecoms costs. And we are pretty close, I think, being able to write to all members with that, and for members using BT, we think we can offer through that initiative, essentially by allowing members to benefit from the beneficial rate we get here corporately in their areas, and I think that's a way to deliver significant costs, and I hope we're just a matter of weeks away from being able to write to all members. Clearly, members will have the right to do that or not, but I would imagine most will. But I think you're right also, Convener, to point to some longer-term potential in other areas like utility costs, whether it's power and others. Some of these become a bit more complex, but I've already got a team working on that as well, and I would hope that we can make some progress on that. And I think it's a really good example where actually you can deliver savings without any impairment to services at all. So I'm keen to pursue that. I think we've taken the best one. I'm hopeful we can make progress, perhaps around utility costs. And again, I'd be more than happy to update the committee more generally, perhaps next year, with how progress is going on that. And so I'm pleased. I mean, it's been a really worthwhile effort, and I'm grateful for your support and encouragement on that.
I think it's worth adding. Paul has brought us up to speed with the initial inquiries and where they've got in terms of the investigation, and I think it's something that the corporate body is very keen to continue to support. I think, as Paul says, there's an opportunity here to make savings in the budget, but not necessarily encroach into an area where I think there's been sensitivities in the past, where the way in which MSPs and their offices procure particular items within their constituencies and within their regions is not something we want to kind of bundle up in unnecessary kind of red tape or centralise to a point where the spin-off benefits within local economies or regional economies is lost. So I think the beauty of the opportunity that you've identified is that that we can make those savings, but they're savings that won't necessarily have that downside of raising concerns in particular local areas.
Well, thank you very much for coming along this morning. That concludes the formal part of our agenda. We will go into private session now, because we will be having to have a discussion with Patrick Honohan, Governor of the Central Bank of Ireland. So I'd like to close the meeting, and we'll reconvene at 5:15.